George of the jungle, strong as he can be.
Hold the press. George, you're telling me that right now in this market that I can get financing below 3% even if I'm not a perfectly qualified buyer? How does that happen? Well, thanks for coming into thecreditjungle.com today. This is George Anderson, and thanks to my son, who I had mentioned had been out looking for seller finance opportunities. I have an MLS number that I'm going to bring up now here, and for the real estate agents out there, they can research the details on this, not on the transaction, but they can see the listing here, history, the prices, and get all the details on this with the confirmation that this was in fact a seller financing closing. But without going into a whole lot of details on this, I just want to mention that that my son's got great credit. He had a large down payment available. He could have put down more than he did, but my suggestion was to him is to go out there and find properties that maybe have been on the market for a little while. The seller maybe hasn't reduced the price, maybe because they can't reduce the price. Ideally, a vacant home, a listing that's vacant would be a much more better opportunity. It doesn't matter whether or not the listing says that it is offering seller financing. You're just looking for circumstances because most agents and the sellers don't know that it's an option. So anyway, so my son had started this journey probably in October of 22 because I told him, I said, look, your last option should be getting a loan. I mean, if you can get financing from a seller at better than current market rates and pay no closing costs, then it's the way to go. So my son and his wife had put out, at least 5 offers, maybe 6 or 7. And it was the standard response. It's like, no, we're not accepting seller financing. No, we're not. No, we're not. We're not. And then finally, this one came up. And they presented an offer. And I had kind of coached my son on the terms that he should ask for. And I said, well, why don't you just say that you're going to put down 10%. You're going to offer a contract for deed as the type of seller financing instrument. And that you're willing to pay a 4% interest rate on the contract balance and see what happens. And so... needless to say, my son did not need my advice. The seller and the listing agent were actually open to the terms of that offer, and by the time that it got negotiated, the type of transaction that it was and the terms of the transaction were actually better than what was offered. How many times do you see a seller counter back with a better offer than what the buyer presented? Well, that's what happened on this one. And so it might take a little bit more patience and a little bit more persistence on this, but the seller on this property had an underlying mortgage that was just over a year old on a 30-year fixed rate loan at 2.75% conventional loan. And the financing terms that my son got with just slightly over 10% down, mirror the terms of the underlying mortgage, Had my son gone out and just gotten a regular loan with 10% down with his mortgage insurance and everything else on this same property with the same amount being financed, his payment is almost $1,000 per month less, by going this route. And who lost on this transaction? The seller got what they wanted from the transaction. The buyer got what they wanted. The real estate agents got paid on it. And I mean, it's just a happy day for people. So don't be afraid to dip your toe into this market out there, because there are a lot of sellers out there who do not realize the value of their low interest rate mortgage. So if you are working with an agent and a buyer and you guys are willing to go out there and be patient and present these offers, educate the seller on the benefits of them, a good buyer can negotiate an interest rate well below what current market rates are, and lately we've seen the market start to tick back up again towards that 7% mark on there. So these deals are even much more attractive than that. For those sellers who know that they have the lower interest rate mortgage on there, you can actually increase the price of your home while offering seller financing, because at the end of the day, the buyer is more concerned about their payment than what they are paying for the home. The payment is more important than the purchase price. So anyway, so this is just a good prima facie example here. Another one, we had talked about the other one previously, but this is a great way for buyers who have at least 10% down to at least consider making some offers and being a little patient on what you get, because the financing terms on this, I mean, hey, this is a great property, but the financing terms on it made it an exceptionally good property. So thanks for coming into thecreditjungle.com today. Remember, you can push button, get Mortgage Professional, and I would be delighted to answer your questions and help guide you into the best financing terms that are available for your circumstances. And you know what, maybe we even need to tweak your circumstances and make them better than what you think they can be. So have a great day. We'll talk to you soon. Bye-bye.